Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, and thanks very much for staying with us during this coronavirus pandemic, which seems to be growing rather than shrinking, and some of the strategies that we're trying to employ to, get back to whatever, don't seem to be working. So it's back to square one in a lot of places, especially here in my own household, maybe in your household too. One of the things that we've tried to do is to stay separate from a lot of people, not a lot of social interaction. We were just getting warmed up to getting out there again. And of course, we have new guidelines by Governor Newsom here in California, as well as many states across the country, as well as the federal government maybe getting together with the states, hopefully, and coming up with a unified way by which we can all deal with this so that we can then have some strategy going forward that will be successful. Other countries have done it. I think the U.S. can do it. And it certainly will help lending. It will help jobs. It will help a lot of things. Everybody out there who is anxious to get into the housing market, I can understand it. Rates are unbelievable, and they've been unbelievable for quite some time. I was just going through. Now, every day we do a show on LinkedIn, and we do one on Facebook. Now, it's not necessarily our show, but it is a like 2 or 3 minute show. So if you did want to see that, you can, or you can see it on YouTube. Behind me is my child's attempt to try to inform you as to where to, if you're seeing the show. And of course, on YouTube, you can see the show. You go to Jeff Barton, the Mortgage Voice on YouTube, see this show as well as the LinkedIn and Facebook 4-minute daily mortgage minute show. All of these informational, ideas of mine to get out to you what's going on currently, really dependent on the COVID virus. As was said recently by a number of economists, it's no longer about the economy, that COVID is the economy, meaning that whatever happens on a daily basis, up or down, will affect the stock market, it'll affect the mortgage market, it'll affect the supermarket. All of these areas are affected by what is happening on a national, international basis with this pandemic. That aside, there are some things in the news that I did want to get to today, so I'll just get right to it. There are 3 different levels of borrowing that we're seeing right now. Before that, let me just talk a little bit about the CFPB and what happened in the Supreme Court ruling. Yes, there's a lot of things going on with the lending industry, and a lot of the attempts by the Trump administration to bring these executive branch level parts of the government under his control, i.e., can I hire and fire anybody I want anytime I want? Well, with the CFPB, there was a court case. It went its way all the way to the U.S. Supreme Court, and in a decision, I think it was 5-4, the Trump administration now has the power to fire the director unilaterally for any reason. There were some people, when the CFPB was set up in 2008, Dodd-Frank set it up, and it was President Obama who selected the first CFPB director. It was Richard Caudry, and they came up with a lot of what we do now in the lending industry, the compliance on the front end of the loan, which simply means that there is a uniform, structured way by which every loan is reviewed, recorded, and then once funded is placed into a federal database. All of these things are good things, I think, and I think they keep the lending industry honest, whether it's the individual mortgage broker or the large bank. We're all in the same level playing field when it comes to making sure that the front end of the loan is good. Now, the back end of the loan, when the loan is sold to the secondary market, that's a completely different story, but that's not what we're talking about here. So when the president now, via the Supreme Court ruling last week, has the right to hire and fire at will, this simply means that the politicization, if that's even a word, the politics is going to play here when it comes to this particular position. It is highly volatile, the lending market, and all products that are within the lending market that continually change are always subject to who is ever in charge. So what happens normally in any lending situation, especially the company I work for, Malibu Funding, right? They're the company that sponsors the show, and they're here each and every week doing that for me, and I really appreciate their efforts to do so. But what they are doing, as well as many other mortgage brokers, when they get a loan and when they get the loan in and when they price the loan, it's all subject to very strict rules and regulations of the industry. If in fact there is a politicization, I can't even say that word, of the job of the CFPB, it could be that 1 year Democratic administration is in, and they're very very much interested in regulating a certain aspect of the loan business, i.e., let's say payday lenders, for instance. You go out there, everybody knows what they are. They advance you money based on your paycheck, and then you pay them back that money plus $50 or something like that. And it rolls over and it rolls over, and they some people say it's usury. Well, a Democratic administration may look at usury type company, if it is in fact usury, and want to regulate them heavily. Election comes, new president comes in, appoints a new director immediately, and that particular viewpoint or focus of the industry, on the industry rather, on that payday lender gets switched. And now they want to talk about reduction in regulation. So what happens, and this could happen ostensibly every 4 years, where the focus of the CFPB changes. Now, we have seen a lot of people talking about overreach by government regulation. That would be a Republican response, or a under-supervised look at the lending institutions out there, and that would be more of a Democratic approach. But it's really difficult if you are a lender, or if you are a broker, or if you are a bank, to continually have the focus of an agency change over time. We've seen it in the Justice Department, where you have had a number of decisions by the federal prosecutors overturned recently by a different attorney general. Now, the consistency of governing and governance is all the industry really looks for, because once we know what the rules are, it's very, very easy to abide by the rules and play by the rules. But if there's constant change and turnover at regulatory agencies, shifting the focus, it just makes it really difficult to know really what the heck we're supposed to do. And that really uncertainty will cause costs to rise with the consumer in most cases, in my opinion. It would be like the COVID virus, and having no particular understanding about when it's going to end, when it's not going to end. And we've talked about it on the show. Overlays are what represents risk. And because of the fact that we do not have a very, I guess, straightforward and understandable response to the pandemic, the costs to the borrower go up because the risk to the lenders is not consistent. So most of your lenders will add overlays. You'll add a quarter point here, an eighth of a point there, and you may be paying, you know, 200, 150, $50 even more every month than you should be paying. And that has to do with the lender wanting to mitigate their risk. Their risk is very real, especially in a climate where we're not quite sure what's happening next. We've described it. We know what it is. What is the solution is a steady hand at all of the regulatory agencies, as well as the federal government leadership, so that we have a concerted response not only to the pandemic, but also with regulatory aspects of the lending industry. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Thanks very much for listening. I wanted to tell you that we're on a number of podcasts. We're on YouTube. We're on, as 5 radio stations in 3 different states. We've expanded the show's reach. We do a 2 to 3 minute every day on LinkedIn and Facebook as well. We're trying to get information to you about the lending that's going on currently in the mortgage world. It changes, and it's sometimes more difficult and sometimes more costly. But you cannot get better rates now that we have now anywhere, ever. This is the best month for rates in the history of mortgage lending, June 2020. To talk about the psychological ramifications of COVID, and then how do we cross that over into calming people down so that they can get out there and see properties and buy them or refinance, is Dr. Jeannie Bartoli once again joining us on the show. Thanks, Dr. Bartoli, for joining us again at short notice.
Thank you so much for including me, Jeff. I'm so glad to be here.
Great, excellent. Thank you again for coming on the show. Okay, let's talk a little bit about what's happening. I know you're down, I think you're down in Florida, is that correct?
Yes, and I just got back from a trip to Georgia, so I'm all over.
Okay, excellent. Well, it's funny, I have a guest coming on the show today from Georgia, Luana Bradford from the Bradford Group. She's going to give us a little bit of a look at that. But what is happening, and what do you see psychologically happening to people during this really extended, I guess the coronavirus is an extended, what kind of problem would you say? It's both a health problem, psychological problem, logistical?
I call it a public health crisis.
Okay, very good. So what do you see there in Florida, and how do you think that might affect a person's decision to be able to buy or sell some real estate right now?
So in Florida, we were very slow to get any number of significant cases. So when the entire shutdown happened, it seemed like an overreach for
Right.
what was going on in all of Florida. So after that had gone on for a couple of months, people were very antsy to get back to their life. We had one of the governors who was first to open the doors again. Everybody got back out again. Everybody seemed to be getting back to normal. And I know that in the real estate world, this was huge. People were buying, as you said, historic lows on refis as well as new mortgages. So not enough supply, high demand, and then all of a sudden, our numbers just surged.
Right.
And we had to shut down, or the governor shut down alcohol, places where alcohol is sold. And so really, this is quite a moving target. And I think
Right.
to your point about psychologically, how do you manage this? It has been very confusing and anxiety producing for the brain. And the best thing people can do is to really allow themselves to process and recognize this is it's more than a bit of a roller coaster. It's a serious attack on normalcy and stability, even if that is a subconscious one.
Do you think that certain people, either genetically or because of their situation and how they grew up or where they live, do you think some people have an advantage in a time like this over others, or is everybody in the same boat?
Well, absolutely. We all have a range of kind of our default position. If we lean toward
Right.
pressure, we lean toward anxiety. And I think what's important to know about ourselves is to notice where we start to use whatever our vice or vices is more than we used to. So are you drinking more, spending more, eating more, gambling more, whatever it is? Definitely, we have different levels of resiliency, but with this level of ongoing, sustained, low and medium and high level stress, there's nobody who's going to escape it totally, like, oh, I'm not affected at all.
Right.
If you weren't affected at one period, you will be affected in another, whether that's through friends and family getting positive tests, or you're hearing stories, or God forbid, you're watching the television. It's just so much going on that there's no way to really have it not impact you.
You know, it's interesting, watching the television thing, right? Each generation has their own way to get whatever news or whatever information. This current generation gets it through a whole range of online, not necessarily television viewing, but my generation, which is, the baby boomer generation, are television watchers. How do you get people to stop watching and to try to concentrate on something that centers them in the moment? Because as I said yesterday to my own family, I said, look, right now, we're here, we're breathing fine, everybody's safe, we're going to have dinner, and we're going to talk to each other. Something as simple and centering as that. How do you get that message out to, many people?
Right. So first of all, you're completely right that different generations get their media from different places, but it really doesn't matter if it's just social media. The same polarization and the same heightened crisis is still the messaging.
Yep.
It doesn't really matter the source of the media because it's the same information. Secondly, you're 100% right on the second part, which is we have to take charge. This is what I took from your story, is we have to take charge of this. And we have to really either lead your family or lead your own self to the promised land, in a sense, to a sense of peace. I've started listening to audiobooks. I meditate. I write. I try to only watch about 15 minutes a day of information/news. So we have to get intentional, because knowing that you're right and this stuff will take you over straight down a rabbit hole if we do not get super intentional.
You talked a little about the scarcity of properties in with your friends in the real estate world down there, and that too, as well as, I guess, the low interest rates. So the low interest rates is getting people excited, but the lack of inventory and the inability to get out and see properties is causing, people that want to buy really a lot of anxiety. What are you suggesting for these people?
Well, first of all, here in Florida, people are going out and seeing properties.
Oh, I see. Okay, good.
So
Excellent.
I don't know if that's happening in California. And the other thing that I've, in talking to my real estate friends, is there's a lot of refis going on. So those people don't have to deal with visiting new properties or deal with the low supply.
Right. Now, you being a real estate investor yourself, how's your own property situation? Is everything good in the number of cities and states that you have properties?
Everything is great. I think that as an investor, what I've noticed is that people aren't quick to leave, that my renters aren't quick to leave. They just keep renewing and renewing at this time. And as you know, I have my real estate investments in St. Louis. And because I don't live there any longer, I'm actually interested in selling those and buying something closer to me here in Florida so that I can self-manage.
Well, right. And I think that what you're saying is, a distant property that you have to hire somebody to manage is obviously taking 2-3% or more out of your pocket. So that makes sense.
Right. That's right.
Okay. So we're coming to, we got about 2 minutes left. Yeah. Give us your opinion as to when you see because what will happen is this will end and people will all of a sudden want to know what is next. How do you prepare for what is next? Because if I read it right, we may in January have a vaccine or some semblance thereof in January, February, March of next year. So planning for the future, are people supposed to plan like, oh, we'll just get back to whatever? Because I don't think getting back to whatever is an option right now. So how do you plan for that inevitability?
So to me, there are a lot of opportunities in the middle of this crisis. First thing is to right now take care of yourself and your family. Wear masks, wear glasses, wear gloves, wash your hands frequently, stay safe so that we minimize whatever the fallout is. Together as one country, we are united, and together we thrive or we face the consequences. So first, let's please take care of ourselves and each other. Secondly, the opportunity here is to really reconsider, where do I want my life to go in the next chapter? Am I really happy with my professional choices heretofore? And is there an opportunity to change here, to pivot? And there are for many people, because their jobs aren't as secure as they once were, or may not pay what they once did. And it's a real opportunity with this downtime to consider and to play around with. If you want to use your voice on, on a podcast, if you want to start making videos about your cooking or your knitting or whatever your passion or hobby is, it's a great time, and it could never be easier because videos are free, audios are free. So start getting your voice out there and see if you can, have some fun with that and potentially create a following.
Hey, Jeannie, could you send out or tell people how to get in touch with you if they wanted to talk to you a little bit further about, some psychological help in this really tough time?
Absolutely. You can find me. My phone number is 727-262-4271 or at Dr. Bertoli, DRBERTOLI at .com, drbertoli.com.
Thank you very much for coming on the show. I always appreciate it, and you always do a great job. Thanks very much.
Take good care, Jeff.
To you too. That's Dr. Jeannie Bertoli. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Okay, very good. Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. And thanks very much for tuning in every week. We are on a number of different radio stations in several different states. Our newest affiliate is down in Albuquerque, New Mexico, and also in Las Vegas, as well as Tahoe and Southern California in the Inland Empire, our mighty Inland Empire crew. And thanks very much for listening to what we have to say about mortgages, mortgage rates, real estate market, and availability of funds for you. One of the things in today's show that I want to get to is there are a number of lenders out there that can help you in the non-QM space. It's just not non-QM pricing anymore. It's closer to not hard money. Hard money makes it sound as if somebody on the corner is lending you a bag and you got to come up with X amount of dollars every week or they break your hand. No, it's not like that at all. These are all very legitimate companies when actually the price that they're charging you is really not that exorbitant if you use the loan properly. And what I mean about using the loan properly is if you have a purchase or you need a fix-up or you need some money out for medical or other reasons on your particular house. You can do that in a number of different ways. Traditionally, how it's done is you would refi your property if you needed money cash out. You would refi your property, new rate, take money out based on the appraised value. However, if you have issues with your employment or if you don't have like your credit is bad, you usually would have to go to non-QM lender. Non-QM lender, traditionally, now we say traditionally, of course, non-QM's only been around 7 or 8 years. Before that, it was called subprime. But the non-QM, the non-qualified lending, is usually priced a point thereabouts above prime lending, or what they would call conventional lending with Fannie Mae and Freddie Mac. These lenders that I'm going to talk about today are priced higher than that. Not exorbitantly higher. Hard money would be at 14%, right? And you'd get 1 year and you'd have a balloon payment at the end. That would be a hard money loan. These loans can be amortized. They're usually, the usual term on them is 3 to 5 years. However, they may be able to roll to a 30-year fixed if, in fact, you can negotiate that with these particular lenders. One of the lenders is called MK Lending. They've been around. They are doing actually much less in terms of the rate on your particular note, and they're a very good lender. We've used them a lot with my brokerage at Malibu Funding, the company that I work for and sponsors this particular show. So MK Lending, check them out, look them up online. Another particular source for more liquid money, more hard money, but yet their price is starting at 7.99%. It may seem like a lot when 2.5% is what you need right now for a Fannie Mae 30-year fixed loan, or 3%. But if you are in a situation where you have issues, and issues being employment or credit or down payment or a number of other things that you want a business bank statement loan, you want some other type of loan, you need to go to particular lenders like this. This particular lender is called Pacific Capital. Pacific Capital, their rates start at 6.99%. So this is another opportunity that you can look it up online and use this information to best what your situation is. Now, a lot of people in situations like that, in situations that need money, that need these types of loans, they would traditionally be the non-QM. Now, we've talked on the show about non-QM still being available at Angel Oak, and they're still available at Lenshore. They're still available at Right Start Mortgage. All of these lenders, now I said that just because I had to think of it. All of these lenders would be in the non-QM space. They would be things that you could be helped with if you need those types of loans. And I know they're out there. If you are a foreign national, if you are somebody that doesn't have necessarily their ITIN number currently, but you want a loan, you want to make sure that you can go to somebody who is legitimate. All these companies are companies that I've done business with in the past. Another one is called Secured Capital Lending. Now, we've had on this show Blake Adams, who is with Secure Business Capital. They do a great job with business loans, business capital loans, loans that be able to help you fund your business, to be able to secure money based on your business rather than based on you or based on your credit score or based on your ability to repay the loan. The business capital loan are based on your P&Ls and they're based on your balance sheets. These are really good loans, and Blake is a really good guy, another guy to talk to. Here's another lender for you, Pacific Premier. Now, I've done business with these people before. They are a commercial and construction loan. We have had call for it at our company many times over the past 6 months to a year. With the fires that have rolled through California and continue to roll through many parts of the world, certainly our fire season is about ready to kick up full blast, and that's another issue that we're going to have to deal with here in Southern California. But because this show reaches many different types of areas and people, just understand it. Building a home, you still need a certain amount of money down. You still need to have plans and permits. How the money's rolled out to you is a whole different plan. But to know that there are lenders out there who are still doing those type of construction financing. Pacific Premier, a guy named Don Sansma is out there, really good guy, and I've used him several times as well. Now, we talked a little bit about taking money out of your house. How do you do that? You can either get a home equity line of credit, which you go to your bank and you say, okay, here's my home, and here's here's the appraisal, and I want to have a line that I can draw against, but I might not necessarily need all that money. That's a home equity line of credit. It's really good way to do business. I don't particularly like it. I'd rather have the money out and know what my interest rate is. Usually a home equity line of credit has a rate that is an adjustable rate, and it can change over time. Right now, the adjustable rates are pretty low, so it's not going to matter. The second trust deed. What is a second trust deed? So most people in California, if you're not in California, you have things like mortgages. Well, actually, west of St. Louis, Missouri, west of the Mississippi River, we do first trust deeds. East of the Mississippi River, we do mortgages. Kind of the same thing, done a little bit differently. Some states have lawyers that you need to employ in order to get one of these done. In California, we don't do that. And so let's just talk a little bit about California. California is a first trust deed. If you want a second trust deed, which would be in second position, which means that when your loan comes due or you sell your house, you pay off the first loan first, you pay off the second loan second, obviously. But the second trust deed is going to cost you a little bit more, but you're going to have a fixed rate, usually a fixed rate 30-year, just like your traditional loan with a mortgage, a first trust deed that you get here in California. The second trust deed company that I want to talk about is Equity Wave Lending. Now, they've been on the show a couple times, and they do a good job. There's only a very few companies that'll do second trust deeds. Now, when you're buying a house, sometimes you will need a first and a second in order to get that property. This is one of the companies that can do it. Equity Wave Lending, they're called, and they're a really good company, and I like them. So what we've been talking about is alternative ways of financing beyond Freddie Mac and Fannie Mae. Because of the refi boom, one of the things you have to be aware of is that the turn times for every company are increased. For these companies that do, extra loans, meaning not normal, not usual, but a second trust deed or a hard money or a construction loan, you're probably going to get your loan done a little bit faster simply because the demand for these types of loans, because of the cost, is not going to be as high. But you will get your loan done more quickly. And in some cases, if you're a flipper, if you're somebody who buys a house, sells a house, and gets it off the market in 30 to 90 days or 90 days to 120 days, the rates really aren't going to matter because you're talking thousands as opposed to tens of thousands, if not more. These types of loans that we're talking about in today's show are the types of loans that can help you in these types of situations. And I want you to make sure that you're thinking a little bit more outside the norm, because if you're going to a conventional bank right now, when you can get a loan, 15-year 2.5, FHA 2.5, and below 3% on a 30-year fix, there are millions and millions of people trying to refinance their loan and make that savings. So unless you've got time on a purchase, and you have to get this done quickly, and maybe you don't fit in the box of a traditional Fannie Freddie, these types of loans are the ones that you need to go to. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. Thanks very much for tuning in. We are on a number of different podcasts. Daryl has been kind enough to give them to me, and of course, I've lost them on my particular phone. So if you give me a little heads up on what they are, we're on the major 8 podcasts. I know iHeartRadio is one. I know Google Music Play. I know Apple, Spreaker.
Correct. Spotify.
Okay, so, right.
iHeartMedia, radio.com, YouTube.
Okay, excellent. So as Daryl just mentioned, we're also on YouTube. The show itself has been on YouTube for a number of years. We have hundreds of shows there. And recently, because of the COVID situation, we've also taken to doing a LinkedIn as well as a Facebook show about 2 or 3 minutes a day that updates what's happening that day in both the real estate and the mortgage market. The mortgage market is tremendous. Rates are really good. But I wanted to bring back to the show LaWanna Bradford from the Bradford Group from Atlanta, Georgia, just because perspective from around the country gives us here in California a little bit of an idea as to not only what's happening in other places, but the opportunities that might be available during this time. LaWanna, how are you?
I'm doing well, Jeff. Thank you for having me. How are you?
I'm fine, thank you. And thank you for coming on the show. I always appreciate your perspective and what you have going down there in Atlanta. Tell me a little bit about what is happening during the coronavirus, during some of the civil unrest, and how's that affecting business, your business in particular, and overall in the market?
I think overall, many businesses are impacted by what's going on. With our state being one that's starting to spike again.
Yeah.
We know our governor has announced that they may start closing some areas within Georgia, so it's definitely going to have an economic hit on those small businesses who are still trying to recover from the first shutdown. And then from a lending standpoint, because we are largely on the commercial side,
Right.
we are challenged as a business with getting some of these loans refinanced because the lenders are looking at this as a higher risk, especially if they know that these businesses have their doors currently closed. So,
Right.
What's the likelihood that they may ultimately end up defaulting on a loan down the road is a big question mark. It makes the lending landscape a little bit more challenged right now.
Yeah, I agree with you. We just spent the last segment going over 2 or 3 or 4 lenders that are going to charge you a lot more money to do commercial type loans or non-QM loans, and that's exactly what you're speaking about.
Yes. And even
So-
the minimum loan amounts are going up. Guidelines are a little bit more stringent. So it's a different world. And the one thing that I know, me and my team, we were talking about, given that this is a very unique situation and it's due to the pandemic and the economic forced shutdown, that
Yep.
lenders should look at it with kind of overlaying a different lens to what's happening as they make lending decisions. So use a more make sense loan assessment rather than being so hard fast with, this is the guidelines that we're not going to shift at all.
Yeah, it's
almost
difficult.
like the borrower is seen as being guilty and needing to prove their loan worthiness when they are in this position simply because of the crisis that the nation and the world are currently facing.
Okay, let's you and I solve the problem, okay? What can we do? You know, I mean, let's just talk some solutions here. In this, and I agree with you, everything you just said, and I think that is across the board for all kinds of borrowers, especially in, as you were saying, in the commercial area. How do you fix that? How do you ask someone who's risking, obviously money, in order to trust or, you know, put it out there that they're going to lend money and this is how we're going to lend money, and I guess give a little bit more of a leniency to borrowers than they're currently willing to give. How do we fix that?
I think the first thing is looking at that borrower's history, especially if we're looking at a refinance, and if you have someone that has been that stellar client,
Yep.
and they are in, again, this predicament, not to any fault of their own, have a separate set of guidelines, exceptions that you kick into place. Or maybe...
Yeah, you and I know how the lending industry goes, right?
Go ahead.
No. You and I know how the lending industry goes, right? I want to lend as much money as possible because I just make a spread. I take that loan and I sell it to somebody else. So if you're in that position, but there are no buyers for the loan, the issue here is what happens to the paper once the loan happens, and is that a product that anybody wants? That's really the issue, right?
Right. That's the main issue, and I don't think anyone would want to pick up the paper right now.
Yeah,
it's a high risk.
Yeah, and you can't say, like, some of these borrowers who got a loan, the week after they got the loan, go into forbearance. Now there's this, and the broker and the servicer, they're all on the hook for it, or the lender, but the borrower has a free pass for a year. So if real estate prices keep going up, they might be able to make money without ever making a payment. So there is risk, and that's what a lot of people are thinking about when they think about, okay, what do I do? How do I lend money? How do I protect myself?
Exactly. But something has to be done in order to, it's more than stimulate the economy. We need to resurrect the economy.
Well, right. And regionally, what's happening down in Atlanta? I mean, real estate prices have really remained strong, right?
Right now, yes. Where there is a risk is in our mixed-use development. Again, where you have retail, restaurants that may have housing developments on top or in and around that area. There could be some long-term risk associated with valuation of those properties, especially if we can't reopen or even fill those that are currently vacant and they're looking for a tenant.
Okay, and now what section of Atlanta are you talking about where they have more of those mixed-use newer buildings, newer units?
You have those coming up in Fulton and DeKalb County.
I see. And as a result, now that was a trend, right? Everybody wanted to get into the mixed use area because it was just, it was more of an older, I guess, style of living where you would have businesses downstairs, people living upstairs. And that was really what was a desirable area to go in. Now it may be a liability because you can't get a loan on it because the businesses may or may not be around.
Exactly. In fact, my brother just in August bought a property in a mixed-use area, and the concept is phenomenal.
Right.
However, when I drive there now, there's no businesses. Their doors are closed.
Yeah, I think some of these businesses need continual support through this time. And I think here in California, most of the businesses have really tried to take advantage of the Paycheck Protection Program, but that was a very short-lived program. And unless you gouged them, i.e. got more than you really should have, you're really done right now with the money. You already spent it. I mean, so I don't know how those businesses are supposed to.
You were only getting enough for 8 weeks.
Right. That's what they said, but nobody was accounting. Nobody came over and checked my books to make sure that what I put down was correct. So I assume some businesses put down more than really what they were making. I would imagine so. We didn't. I took Paycheck Protection Program
Right.
too.
I'm certain they did, but when it comes back to either having that forgiven or repaying that debt, that's where the verification is going to come into play.
Well, in filling out the forms for forgiveness, they're very confusing forms. There's like 8 or 9 pages. And it's one of these forms where you fill out one square and it says refer back 3 pages. And then you fill in that square and it says, okay, you multiply here and then take that number and go to subsection D. It's very confusing.
Yes.
Hey, Luana, we've come to the end of the 10.
I'm sorry?
No, go ahead. I'm sorry.
Oh, I was just going to say, because of that level of confusion, I think most small business owners are just going to say, forget it, and I'll just get out that loan at the 1% interest rate and deal with it.
Yeah, I mean, that's what we're going to do if we get denied. Anyway, Luana, we're at the end of our rope here, and I really appreciate you coming on the show once again, giving us a good perspective. I don't know if we solved any problems, but we certainly brought up enough.
Yes, we did.
Thank you very much for coming on the show.
Thank you. And can I tell them how they can reach me?
Please do. I forgot to say that. Yes, please tell people how they can reach you. Yes, I'm sorry.
They can reach us at our website at Bradford Group, MTC, like BradfordGroupMortgage.com, or call us at 404-618-2824. That's 404-618-2824.
Thank you again for coming on the show.
Thank you, Jeff.
Sure. It's Luana Bradford from the Bradford Group. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for hanging with us. And my terrific partner engineer here has sent me out an actual list of all the podcasts that we're on, and I want to read them all to you. Apple Podcasts, Google Music Play, Spotify, Sprinkler, Stitcher. Okay, very good. Sorry, I messed that one up. iHeartRadio, radio.com, and YouTube. All of these are terrific. The Big 8 podcasts that we are on and have been on, thanks to our affiliation with KCAA Radio out in the Inland Empire in Southern California. I want to thank those people there, KMET, as well as K-Tahoe up in Tahoe, and KSHP, K-Ship out in Las Vegas, Nevada, and our newest affiliate in Albuquerque. And on today's show, I was really happy to have Albuquerque represented by yet again another terrific real estate agent down in that area. What is the call letters? K-Win, right?
It is K-Mine Country, K-M-Y-N.
Excellent, very much. And thank you very much for all those fine people and the people who do listen to the show. It is a weekly show. It's on Saturday and Sunday. You're driving around. If you tune us in, you can hear some information that you like or that you think you might want some more information. You certainly can go to YouTube, by the way, Jeff Barton, the Mortgage Voice, and subscribe to my YouTube channel. You can get this as well as our daily 2 to 3 minute LinkedIn and Facebook shows. Let's get right to what I'd like to talk about again. Let's see. It's all about Corona, as everybody knows. As Corona goes, so goes the economy. And as the economy goes, so goes your job. There are still 40 million people who are out of a job right now. There are 4.5 million people in forbearance, and we're not quite sure what the response is going to be and how long it's going to be until we get a vaccine. So all of these considerations really affect the mortgage marketplace. The real estate marketplace, on the other hand, prices have not been affected. We've actually seen an increase in prices nationally and locally in all these markets that we just talked about. 3.5 to 5.5% have risen this year. The first half of the year is gone, and that is an amazing accomplishment, really. 2 things cause that, right? Low interest rates, and scarce product. So you have a number of people who are still able to buy a home, even though there are fewer homes. But because there are fewer homes, there's more competition for those homes from the people who still have a job that want to buy now because the mortgage rates are so low. All of these things are combining to maintain the price of real estate. Question, is this an artificial, prop up? Is this the real reflection of what the values of those properties are? Now, I talked to, I forget the name of that company. Do you remember the name of the valuation company that was on about 3 weeks ago? They were on, I'll get it by the end of the show. They talked about appraisals and why appraisals are what they are right now. As we know, if you are a seller, you don't have to have the appraiser into your house. If you have an AVM software associated with the loan that you're trying to get through Fannie and Freddie, it may be unnecessary for the appraisal to go out. But without a home inspection, not a home inspection, a home appraisal, and without somebody actually viewing the property, and without actual comps, because there's just not that many sales in certain neighborhoods, how do you know what the price of that house is? Now, we all come to know, right? Buyers and sellers get together to agree upon a price. That's what it's worth. But that's not how it works in the lending industry. The lending industry works on what the appraisal says. If the appraisal comes in, and I've had this happen in the last 3 weeks, 2 different appraisals came in lower than what the agreed upon price of the purchase was. So what happens in those situations? Either the seller lowers or the buyer increases, or they meet somewhere in the middle. But that doesn't mean that met in the middle price is going to be what the buyer and seller agree upon and what the buyer can get a loan for. The lender will lend on a percentage of whatever the appraisal price is, whatever the appraisal is on that particular property. So as we all know, that particular situation is tough because it may be a down payment situation that the borrower just doesn't have it. It may be closing cost situation that the borrower just doesn't have it. It may be reserves that the borrower just doesn't have. And it may come down to like $2,000 or $3,000. But it's amazing how little money will be able to kill a deal. And in this situation, in one of my deals, it did kill the deal, and we had to go out and get another buyer. So anyway, that's a reason to really watch what's going on in the appraisals with all of this. Pending home sales last month. The pending home sales. Now, this is coming off the heels of one of the worst, when we had stay-at-home orders, right? Nobody could go out. Just as an example, in Las Vegas, during the stay-at-home order, the occupancy rate in hotels was 2.8%. Now, Las Vegas has 140,000 rooms, and all of them, except 2.8%, were closed. And 96% of Las Vegas casinos were empty, and 96% capacity. And so this tells you that during this particular time, the country was shut down. But since that time, we've seen a 44% increase in home sales. That's amazing. So if we open up, if the economy can get back on its feet, if they can get their act together and figure this corona thing out, have a uniform, strong response so that we can get back to what we want to do, which is life. I don't know about you, but Daryl, you going crazy there with this thing?
Oh yeah, it's nuts. I mean, day to day, you can't do this, you can't do that.
Right.
And what's more crazy other than the rules are the people, the way they're reacting.
It's so true. I can't even go on Facebook half the time because most people are just either politically motivated or they're just cranky people. Every day, if I see another person toting a gun and marching against the other marchers, it's just insane. People, calm down. Jeez.
Yeah, they're defending their property with an AK-47.
I saw that. Yeah, and that's the one I was referring to. And it was it's disheartening. It just is. It's not necessary. And I think it's because we've been home for a long time. It's really not that big a deal, to be honest with you, to be home and not wear a mask. But it's the inability to go out and do what you want is really how it plays with you. And that's how it's playing with me. For buyers of property, I totally understand, the virtual buying experience. I have a property myself on the market, and you get a lot of inquiries, a lot of questions which could be answered with just a simple walk around the property. Well, you can't walk around the property. You might be able to get in one time if you want to buy it, and that would be after an accepted offer. You can have a home inspection. But other than that, it's been very, very difficult. And so if you're a home buyer out there, I really understand it. And I really don't have an answer for you except hang in there, get something you like. The rates are great, and you probably should be able to afford it if you got a good job. Let's see. Lending in June, volume was high. The margins are high. The mitigation of risk, which we've talked about, and the products are limited. There's a number of things that we talked about earlier that I wanted to get to. A little bit about the CFPB. The single director is out, and we probably will have more of a, I guess, a committee of 5 or so maybe, or they will have a single director that will, have a 4-year term or whatever the president's term is, rather than the current 5-year term, which is the way it is at the Fed. It's the way it is at a number of other agencies, which are a little independent, a little quasi-independent, but the CFPB is not. That's an issue. It's not an issue directly to rates or directly to lending power, but it is, as we discussed in an earlier segment today, a little bit about what the direction of an agency and how that affects the industry as a whole, especially if you're switching gears from one thing and then instantly go into something else. What happens with either the ruling or the rules or the primary focus of what was versus what's going to happen, and how that uncertainty really will affect rates. Because if you just don't know what's going to happen next, you're going to charge more money. And you just have to, because you may be in a non-regulatory situation and get right into a regulatory situation, which is going to cost your company more money, and therefore you have to have reserves, or you have to have something backing you up in order to be able to pay for it, or else your business doesn't work anymore. And we've seen that incredibly so on the number of small businesses, the millions of small businesses with the people that they employ, just not being able to go back to work. And we're not quite sure where that is going to land us. Anyway, that's this week for you. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.